Well, good afternoon. You're watching Closing Trades on ET now, and the closing trades are suggesting that we are going to end in the red, and sharply so. So after that Monday sell-off that has actually intensified today, we're staring at a level of just around 19,100 at the index level. 19,200 has been broken quite convincingly. There's a sharp spike in India VIX as well ahead of expiry tomorrow. Of course, it's a monthly options expiry, and ahead of that, there's a 6 to 7% surge that we have seen in India VIX. Nifty Bank has managed to hit the 5-month low. So we had already seen Nifty hitting the 5-month low earlier. Now it's Nifty Bank also which has seen a bit of a slide. It slipped below the 43,000 mark on an intraday basis. What's holding out today is only the metals pack. So if you look at a Hindalco, a Tata Steel, a Jindal Steel, a JSW Steel, these are the stocks which are holding up, because other than that, all the sectors are trading in the red. And I saw there's a definite underperformance from India, because if you look at the Asian markets, some actually managed to close in the green. That Hong Kong, stimulus for stock markets, etc., did support the sentiment there. And Europe and US are not looking that ugly.
Europe and US are not looking that ugly, but if you were to just put it into context, even for the week gone by, we were actually rank outperformers. So don't, it may not be right to really have that like-to-like comparison. Of course, today we are the world underperformers, so to speak. Having said that, the texture of the market, of course, is looking extremely bleak. We've even breached that 19,200 level now, and significantly sub that level. A truncated week. Tomorrow you've got expiry, and yes, it's all falling down right now. 155 points lower. That's where the Nifty futures are currently. Most sectors under pressure, barring metals, which are seeing a bit of a rebound, and maybe technology and FMCG to some extent are not falling as much as some of the other sectoral indexes. But look at telecom, look at power, pharma, financials, chemicals, autos, media, cap goods, oil and gas, cement. These are all sectors which are weighing acutely heavy on the indexes as we speak right now. Some of the key losers: Cipla, Apollo Hospitals, Divi's Labs. Pharma really is taking on the chin today. Adani Enterprises, Bharti. You've got an Axis Bank as well, ICICI Bank, Bajaj Finance, L&T, Infosys. Some of the blue chips as well are falling in a falling market. Even the breadth of the market has gotten challenged today. So it's a 2:1 ratio that you're forming within the F&O universe, with Shriram Finance down nearly 4%, Bharat Forge down 3%, Godrej Properties down 2.5%, and then JK Cement as well, which is down by about 2.5% as we speak. Let me quickly bring on board our chartists here and find out what exactly one should be doing as a trader in this market. Naresh, hi, afternoon. What happens next now that we've breached the 19,200 level as well on the index?
So the first thing which we started seeing in the last two sessions is the breadth has also gone weak. In the previous dip, when we came to 19,200, we did not see a similar hit on the breadth. We did not see mid-cap, small cap indices do bad. So now it's been a correction across the board in the last two sessions. So we've broken that 19,200, 300 mark. We are getting into oversold zones, but you don't want to buy the first dip. Say we bounce back from this 19,000 or 19,100, go to 19,300, and then maybe again dip. The second dip is where you would like to buy. So for now, it's a time to wait it out, trade less or trade nothing. At times, not doing anything is also a good trade. So I think we are in that scenario.
Trade is also a good trade right now, but let me take it across to Kunal. He's culled out some data on Nifty Bank, the trend we have seen so far, and what could be lying ahead for us as far as Nifty Bank is concerned. Kunal, tell us your insights.
Thank you so much for that, Anisha. So one of the most rarest of the rare observations is something which I would highlight for the Bank Nifty today. So, in the month of July, we ended 5 consecutive months of positive gains for both the Nifty and for the Bank Nifty. But the data for the Bank Nifty is very, very interesting. Now, there are 2 time spans which we are talking about. One is after that 5th month of peak or positive gains for the Bank Nifty, what happens in the next subsequent 6 months for the banking index. We look at this in the historical context. And then subsequently in the 7th month from the first formation of the top for the Bank Nifty, how has the index performed? So we look at the first set of data. The first set of data indicates that from 2006, 2007, as you can see, 2014, 2016, there were, there were 4 to 5 such occasions where the Bank Nifty had actually shown 5 consecutive months of positive gains. Subsequently, in the next 6 months, after that 5th month of gain, is where the Bank Nifty at one point even dropped by a margin of 10% on an average. There have been months where the Bank Nifty was down 15 to 20% as well. But then what happens is then the 7th month onwards is where we see the banking index start to deliver positive returns. And we are not just talking of an average positive return, but we are talking of this as an average return of more than 10 to 15% from the 7th month onwards. So if we do that math, so as you can see, this is 2006, 2007. 2006 we gained 9% from the 7th month of forming a top. 2007, 25% return for the bank Nifties. And this at a point we're talking about when the banking index was going through a very severe kind of a global news flow. 2014 and 16, again a very similar kind of a stance. Bank Nifty delivered returns of more than 30% to 9%. So which means if we do the math, for the last 5 readings, we've seen the Bank Nifty showing returns on the positive side by a margin of more than 10%. Where does this lead up to? So if you look at the calculation, July closing high for the bank, or the closing for the Bank Nifty was around 45,600 levels. And if you look at the next 7 months, which means end of February 2024, we are actually looking at the Bank Nifty possibly hitting levels of even 50,000 for itself, which means that this correction could actually be a good buy on dips, rather than a sell on rallies kind of a correction.
Right, okay. Let's welcome on board Daljit Singh Kohli as well and find out what he's recommending in this market before we talk about all the stocks in news this afternoon. Daljit, hi. What does one do in this market? Time to protect capital or do nothing right now?
Good afternoon. No, I think it is giving you good opportunities for loading up on the stocks that you always wanted to buy at a cheaper price. It is coming out for last 2-3 months. We've been hearing everybody talking about market गिरता ही नहीं है, small cap, mid cap नीचे ही नहीं आ रहे. So now when it is coming, this is the time when you have to show your conviction. Now, obviously, market has its own way of removing the froth out. There were defense companies, railway companies, a lot of stocks which were trading at abnormally high valuations. So those valuations are now coming to the right place, and that correction will happen. That will always happen. So I think in this bargain, if you get your good stocks and if you have to be little preemptive on what sectors can take over from here onwards, then this is a good opportunity for people like us. We are actually using this as an opportunity to add on some of those themes which we always wanted and which are now giving us a better opportunity to enter.
Those themes and which are those stocks? I'm sure that's what is on Aisha's mind as well.
So stocks, I would not be able to call out because of the compliance reasons, but I can give you the themes and the hint about the sectors. So for example, we are looking at agrochemical is one theme, which is where we feel that the bottom is probably in sight now, maybe 1 or 2 more quarters where we'll see some pain. This quarter, most of the companies are going to show very bad numbers. One of them has already come out with the numbers, which was not so great, but then it is in the price. So this is if one is of the view that over next 1.5 years, this cycle will bottom out. So you will get a lot of opportunities in this segment. Second is in autos and auto ancillaries. Again, we are very positive. The data which is coming out every day in terms of festive sales and all these supply issues going away. So auto sector is doing very well. So the suppliers to all these companies, maybe a forging company, maybe a lighting company, maybe some seats and all those ancillary companies across the board. There are quite a few of them which can be of good interest and which are now available in last 2 days only 10% cheaper. So that is giving you a good entry point there. So like that, we are looking at those sectors. Metals, we remain quite bullish. We have added some. Now in metals again, instead of going to the top metal producer or the straight away going to the big names, we would like to go to the integrated players, not integrated in the sense of mines having, but integrated in sense of having a wide range of products, which are actually a consumer product. No, so which can be used like pipes or other things. The producers of steel, which will go into all these kind of construction activities. So that again is giving us a good opportunity. So that like that, there are few themes which are working. And then consumption, we have not had any stock of consumption in last 1.5 years. I think now the time is coming. Again, post these results, we've seen some companies showing only 2-3% of volume growth. And now this is not going to remain always. And in an inflationary environment, we expect that inflationary environment will persist. So in an inflationary environment, FMCG companies, consumption companies normally are beneficiaries because their nominal value goes up. So they can be actually beneficiary. And if they are available again, because of this correction, they are available at a better valuation, we would definitely want to blow up.
Right, okay. Let me also welcome on board then Jay Bala and find out what he's making of the market right now. Jay, what's the sanctity of breaching this 19,200 mark?
Hi, thanks for having me on the show. See, 9200 is not a significant support level, but the market is probably bracing itself for a much bigger decline. And at the moment, there are significant breakdown in the Nifty banking index and the market leader, the FMCG stocks and the capital goods stocks. So basically, this looks like the start of a much bigger decline, and this is just only a preamble.
Much bigger decline for us? Are we talking about a 500-point correction? Could it be much worse?
So the minimum the market is, in my opinion, is going to drop to about 18,500. And so when the market gets to about 18,500 to 18,400, I will evaluate the market at that point. That'll be a decision point for me. This does look like the markets are going to drop below the 2022 low, but that's at the moment I'll keep that as a evaluatory. I will take that a firm call once the markets break below 18,500, 18,400. If you look at the global macros, it does look like the US markets are shaped to decline really sharply. The AA rally the US markets had between May and September. May and August, it's come to an end. This has been my view since September, and so given that environment, and I'm expecting the US dollar to strengthen and the US rates to go much higher. So I expect global macros to come and play and have a significant impact on India.
And considering it is all correlated with how the US yield has panned out, Jay Bala, if you've been reading those charts, does it seem like it's going to continue at an elevated mark of 5%?
Yeah, see, when the US yields were trading at about 113 pips in July 2021, I had put out a medium to long-term call for 325 to 400 pips. That seemed outlandish at that point of time. And now we are at, we have touched a print of, 500 bips for the US 10-year. But my long-term call for the US 10-year is about 800 bips. But at the moment, in the short term, we could see some cooling off, and that will be due to a flight to safety. The bond markets are meant to, usually meant to provide a safe haven when the equity market starts to tank. So that's exactly what is likely to happen. And I see the yields cooling off because there will be a flight to safety to bonds.
Flight to safety when it comes to bonds will happen. But just before we slip into a short break, Jay, your view on the mid-cap and the small-cap space as well as Bank Nifty. So you talked about how at the Nifty index level, you're talking about 18,500. Are we expecting a bigger cut when it comes to the mid-cap and small-cap purely because they had run up quite sharply, 25-30%?
No, if you look at the mid-cap and equity, small caps, they have nearly doubled from the March. They didn't double exactly, but they were slightly short of the doubling level. So that's a steep rally in a short span of 6 months. And whatever profits people are having right now in the mid-cap and small caps, they need to pocket it because that evaporates really soon. If the 18,500, 18,400 on the broader markets come through. And, the other part is that, you spoke about banking index. But we spoke about the banking index having a significant long-term resistance. We had mentioned the last interaction. If you draw a trend line from the 2008 high, 2013 high, 2016 high, that comes at about 47,000 for the banking index. And now yesterday's close for the banking index has completed a double top. That's a very significant move for the banking index. And this is occurring at the back of a head and shoulder top for the Nifty index. So the indices which have been very strong, like the BSC, the bull market had been led by Nifty Auto, Capital Goods Index, and the FMCG index and the Realty index. All these prime indices are showing a reversal in trend, but we need to see if the medium to long-term supports hold. That's what we are trying to evaluate when the markets get to about 18,500, 18,400. So at the moment, 18,500 is a given for me.
Okay, we're going to take a very quick break. When we come back, we'll of course continue our discussion with all of our experts on board. Back with closing trades, and it's definitely not a pretty picture after a day's break at a time when the globe is actually holding up okay. We've breached some significant marks like 19,200 on the index. In fact, well sub 19,150 as well. It's a cut of a good 135 points that you're seeing. Pretty much across sectors, the weakness persists, barring, of course, few odd like metals, technology, FMCG, which are relative outperformers. But the weakness in telecom, media, power, financials, pharma, infrastructure, cement, autos, that's pretty prominent. Even the breadth of the market has been challenged today. It's a 2:1 ratio that we're clocking currently. But Kunal, just wanted to get your sense at a time when we've seen fair amount of resilience, and it's almost on a year-to-date basis, the previous year as well. The small and mid caps have done way better than the large caps. Do you see that continuing?
No, I think I see a definite tilt from the small caps and mid caps towards large cap names. Every market correction or a new trend comes out with a new sectoral balance. Like for example, in the last leg of the market uptrend, there were a lot many mid caps and small caps which are doing pretty well. The large caps underperformed. I believe now could be a sign where the mid caps and small caps will start to underperform significantly, and the tilt towards the large caps would be a lot more positive. So by that I mean, looking out for the underperformers, for example, the likes of HDFC Bank, Kotak Bank, Reliance Industries to a larger extent, the FMCG majors, many of these stocks could actually turn out to be good buys, at current levels. Because my sense is that whenever this churn happens, this may not just be a 1 or 2 weeks of churn which you're looking out for. This ideally turns out to be a 3 to 6 month kind of a sector trend. So I believe in that regards, tilting the mix of the portfolios could actually be a better strategy rather than just sticking to the portfolios and hedging the mid cap end of the portfolio.
Okay, so that's a take coming in on the portfolio. But if I can come back to you, Jay, within these sector allocations, which is the space which is looking the healthiest, or perhaps the place where you would want to hide right now?
Yeah, if there is any sector, that would be the pharma sector. I think the pharma has one pending high to come through. It's an incomplete structure for me. So I would treat only the pharma index as a buying opportunity, and I'll be a little more, nuanced and more patient there. Other than that, I don't see any other hiding place there. It's better to go to cash.
Better to go in cash. That's the big call coming in. Naresh, let me quickly get you also in the conversation, and I want to specifically talk about the charts of ICICI Bank. A definite weakness today, almost a 2% slide, and even Axis Bank ahead of its earnings is not looking too powerful right now.
So the whole banking pack has been a little odd in terms of price action. So expectations was the trends could get sharper. We saw breakout of 960, faltered at 1,000 ICICI Bank, and now we've gone below that 960 mark, and now we are testing the lows of June, which was around 910 odd levels. 910 to 900 is a support which is very important. If it starts breaking below those levels, then we get into a much deeper correction. So out here in the banking index as such, given that it is the most highly owned, as well as from the FII side as well as on the mutual fund side, price action as of now is weak. So not trying to find a bottom here. We've seen a breakdown below 43,500 on the bank Nifty as well. So till the time we don't go back above those levels, I would rather let it be in a slow and steady drift. So no view at this point of time, no real trade. Result reactions could be not followed up. So we saw a price action of positive on IndusInd Bank post numbers, and now we are back to the same prices which was their pre-results. So for now, banks are under pressure. They are more sideways. The largest one is sideways. ICICI Bank is struggling to make a move beyond that 960 mark. Same way, Axis could not sustain that 1,000 mark and tried to do so for weeks together. So for now, it's a sideways drift on the whole banking space. We'll start looking at it once we start crossing 3-day highs on any of them. Till that point of time, let the drift continue.
Daljit, if I could get you in as well, wanted to understand what's looking like the weakest link in the market right now sectorally to you. Does it continue to be IT or you think it could be banks as well? Daljit?
Is it for me?
Yes.
Okay. So see, in fact, we are not looking at IT as a weak link, and we feel that probably all this news is very well factored in the stock prices. Yes, they can slide little more because of the market reactions, but then these companies which we are looking at, they are doing some specific work which is required for these for their clients to run their day-to-day business. So it's not going to be out of the business. Yes, there are delays. If you see the results of all these IT companies, deal wins have been very strong. So and now they can convert into revenue over a period of time. Earlier, we used to see the deal win has come and immediate conversion starts, but now probably there would be some delay. And that delay would not be 1 or 2, maybe 1 or 2 quarters, not more than that. So I think it is actually the time to look at IT with the perspective of 2 to 3 years for building your portfolio and adding at every dip probably. We have 1 or 2 companies which are frontliners in the IT pack, one from the large cap and one from the mid to large cap, you can say. But we will obviously be adding some of these more over a period of time as more visibility comes. And we are basically banking on the deal wins and the client concentration that these guys have.
Okay, point taken. So good time to start building the IT portfolio from a 2 to 3 year horizon, but it's not completely down and out. There are stocks and outliers which are holding up okay. Pull up a Welspun India. That stock has surged 12% after it reported its earnings. So a very solid set coming in, and that's coming after months and quarters of underperformance because the export market was hit. But this time around, we are seeing a definite reversal. The other export oriented stock which is doing okay is PDS. That's of course into apparel retailing, etc. So that is also high by 7%. Separately, BSE continues to build on gains. So that stock is high by 5%. You also have select real estate names, the likes of Anantraj, etc., which is high by around 3 to 4%. So watching out for some of these names. In fact, Daljit, do you watch this space closely? Textiles, especially export textiles, the likes of Welspun, Gokuldas, KPR Mills, etc.?
Yes, we do. We, in fact, one of the names that you have taken, we are also interested in that and working on that, though it is right now not a part of our portfolio. That's a disclosure. But we are looking at that because, you see, after 1.5 years of inventory rationalization at their customers' end, most of these companies are now seeing that reversal coming in. And on the other hand, the crop on cotton, which is the basic mainstay for most of our exports, that has also been in line with expectation. So which means till last 1.5 years, we have seen that Indian cotton used to be at a premium of export prices, more than 20-30%. At one point of time, the spread was more than 20-30%, which meant that it was not feasible for any buyer to buy things from India. Now all that rationalization has happened, and most of these companies are on the track to go back. So maybe the home textile companies, there are 2-3 of them which are definitely poised for a good growth. Things like Gokuldas, they are already moved so much and people have already built in a lot of expectations from them. So maybe their valuation comfort is not there, but other companies which have not yet moved, or the companies which have just shown good results and people are extrapolating that, I think that's the way to go. In fact, the overall view is also this, that stocks or the sectors which have not performed in last 6 months, and if there is a strong fundamental reason or there is a change happening there, those are the things which one has to look at for their portfolio. You see, for last 6 months, most of these companies have doubled, almost 60-80% from March to now. So obviously the positives have already been factored in. Now from further to go from here, what is there to re-rate? Nothing. So it's better to look for those companies where the changes are happening in the sector or the stock specific, where there is some change happening, and that change will actually drive the stock re-rating. And that is where we are actually focusing on.
Okay, Daljit, we'll let you go on that note. Jay, if I could just come to you and, get in a last comment. I mean, I know you're bearish on the market right now and you definitely see way lower levels. But any contra calls that you spot right now?
Contra calls, are you looking at buy calls? No, I wouldn't suggest that. If you mean by contra, by buy calls, no, I don't have anything. Even for the pharma sector where I'm bullish on, I'm waiting for another 300, 400 points drop on the index to come through. Only then I will get bullish on it, and I would like to see a reversal there. I will not pull the trigger right away. So I'm just in a wait and watch mode for buying. But there are umpteen shorting opportunities, and the banking index hasn't had a red October for the last 10 years. The fact that it's likely to do it for the first time in October since 2012, that itself is a significant factor for the overall market. So be cautious. Holding cash is one of the toughest things to do, and for those who can manage to do that, they'll be having a win year after year. Half yearly after every half year. So, having patience holding cash is the most important thing.
Taking capital preservation, that's the motto right now. But on that note, Jay, we let you go. Thanks so much for joining us. But let's take the closing trade ideas as well from Kunal and Naresh. Naresh, what's the closing trade idea, if any, or you're sitting in that no trade zone?
So mainly in a no trade zone, but a small trade would be to go short on PFC. The stock has been the best performer in the whole power segment, so a very strict stop loss at 242 and expect some bit of a correction to 230, 232 levels.
Okay, at least there's some buying opportunity which is still emerging. Kunal, what about you?
So yeah, Polycab is something which I'll look to go for a closing trade on the long side. Looks attractive in terms of the risk reward at current levels of 5,030 where the stock is trading.
Okay, time now to slip into a very short break, but don't go anywhere. Market is very precariously placed. We'll keep tracking last 30 minutes of the trading session when we come back. Welcome back. Well, we are drifting between 19,100 to 19,150. It's the Bank Nifty, which is down almost 300 points. And of course, a lot of names from the mid-cap arena are taking it on the chin, and no reason as such. For instance, Mrs. Bector's, that's down a good 8%. Safari Industries is down 7%. You also have Tanla Solutions, HEGS, some of the other names which are not doing well in the trading session. But a lot of action still in the IPO market despite the volatility that we are seeing in the secondary market right now. And of course, the big one that we all are watching out for is Mamaearth's IPO. There's a press conference which is expected to happen tomorrow, and the IPO is likely to hit Dalal Street on October 31st. But how the valuations looking like? What are the internals of the company? Let's go across to Vinny to get a gist of all of that. Hi, Vinny.
So yes, we are talking about Honasa Consumers IPO, the much awaited one. It was the most talked about for a while as well in terms of valuation. Now the IPO is opening on October 31st. Price band is not yet officially out. There is a press meet that we are watching out for. That will be tomorrow. Now the IPO size is 365 crores is fresh issue, while OFS is around 4.1 crore shares. Talking about the company a bit, Honasa Consumers obviously has brands like Mamaearth, Derma Company, Mom's Presso, B Blunt are some of the acquired companies by them as well. And this was the company was established in 2016, focuses on development of toxin-free beauty products as well. And obviously some of the brands, like I mentioned, the key brand and the flagship brand is Mamaearth. Now the company has so far raised around 655 crores from various investors, which include names like Fireside Ventures, Sequoia Capital, Avalor Nins as well, India, which is one of the names that have come in terms of the previous who have raised money, whom they've raised money from as well. Now, the last fundraise which the company raised was in September 2022 from Shilpa Shetty Kundra of around 262 crores, which valued the company at 8,200 crores that time. and no single listed player is there in terms of a peer for them right now. They compete with large FMCG players is what you could directly compete them with. And when you look at in terms of the financials of the company, they've seen a CAGR growth of 92% from FY20 to FY23 as well. And in the Q1 of FY24, they've seen a revenue of 464 crores. Margins have come in at 6.3%, which is, when you compare it with the last couple of years, this quarter in Q1 itself has been really high, 6.3% in terms of margins. Let's keep an eye out on this one. The fundraise mainly is going to be used for ad spends. They'll be spending 182 crores, capex of around 21 crores, and investment in B-Blunt is there looking to set up new stores, which is going to be of 26 crores as well. So yes, we're keeping an eye out on the IPO, expected to open up on 31st of October.
Right. Okay, Vinny, thanks for highlighting. That's a big IPO and a much awaited one at that. Devang Mehta as well joins in at the show right now. Devang, hi, afternoon. Can't take your eyes off the weakness in the market today, especially at a time when the globe looks quite okay. Time to buy the fall just yet or do nothing?
Thanks for having me on the show, Aisha. I think yes, the answer should be not an emphatic yes, but yes, gradually, probably a staggered approach or a staggered manner to get into the markets, because I think this was the correction a lot of people were waiting for, because the market rally as well as rally in few sectors and stocks was such fast and furious that a lot of people sort of missed out on the entry point. So one senses that this is not any fall related to India. This is more or less, yes, we are surely connected to the global environment, and yes, when US bond yields again touch 5% and go more over that, this is the type of volatility it brings into the proceedings. The Israel-Hamas war, whatever happens to crude, the FII, relentless selling from the FIIs, strengthening of the dollar. I think most of this are known to the markets at this point. We are getting into our result season, into the peak of the season. Some of the banks have come up with good set of numbers. Some IT companies have not come up with so good set of numbers. So I think it's a different type of contradictory trends as well, which we are watching in the earnings season. So one senses that yes, this is sort of an opportunity in adversity, if I can call that. And it's a good time if somebody wants to transact over the next 3-4 months. You will get to see the election volatility. You will probably get into the festive season. You know that probably the next quarter will be a lot better quarter, and already all the discretionary consumption and the car companies are talking about good trends. So I think 2-3 months of volatility, and probably things will even out in the next 2-3 months.
Point, Devang, have you got a chance to look at Honasa's business profile and the model as yet? And if yes, what's your take on that?
Unfortunately, couldn't look at that, but yes, awaiting the press meet as I was just listening to what you were showing on the channel. Yes, so I think probably a lot of people would be eager to know that the markets have become extremely volatile, the secondary markets, and how primary markets sort of has seen good bit of traction over the last 3-4 months. So probably how this IPO gathers momentum or steam, that's one thing to be seen. And of course, the business would be more in depth. We will study it a little more in depth once we get closer to the IPO.
Okay, let's just take a pause for a bit and address, in a piece of ET Now exclusive news. And the government, we understand, is likely to announce some relief to domestic steel producers. In fact, we learned from our sources that the countervailing duty may be imposed on import of 200 series of steel products. My colleague Prakash Priyadarshi joins in with more details. Prakash?
Steel Ministry has once again approached Ministry of Finance with a new set of proposal. Steel Ministry has requested Ministry of Finance to take necessary steps in order to protect domestic industry. Other than that, DGTR, which comes under Ministry of Commerce, has also recommended to impose countervailing duties on certain category of stainless steel products in order to protect domestic industry. Taking all into consideration, Ministry of Finance is examining this proposal. As you are aware that the industry has been recommending government to take necessary steps in order to curb heavy imports of certain category of stainless steel products, which is happening especially from China. As per the details, if you look at imports from China in the context of stainless steel products have seen huge jump from 5% to 45% in last few years. So taking all into consideration, government is now examining this proposal and may reimpose countervailing duties on certain category of stainless steel products in order to protect domestic industry.
The domestic industry will get protection on account of these certain duties, and for now it seems like the stocks are reacting positively as well, whether it's the Tata Steel or JSW Steel, because otherwise of course the market is quite weak. This is the only space holding up. Devang, your view on the metal stocks and any recommendation?
I think that yes, this pocket has generally seen good strength, and it's very contradictory in nature as such. Because when you encounter a lot of global volatility, you find a lot of these businesses not doing so well. But yes, the cyclicality the deep cyclicality that this sector brings in, it's into sort of a good period. So we generally refrain from buying it more in the core part of the portfolio. Yes, tactical allocation, if somebody has a 1-2 year horizon, can probably look into a bit. But as I said, a lot of volatility can come into the proceedings. Once a market gets back on its toes, I think there are a lot of interesting sectors which we are seeing a lot of correction. So I was just reading, even a lot of bank Nifty stocks are getting to the year's low or this year's low. So I think a lot of interesting opportunities will evolve in auto, financials, capex oriented stocks. So there will be multiple opportunities over here. So I think something which can turn volatile, something which has a lot of global volatility, one should sort of, at least if not avoid, then don't create very long-term positions over there.
Right, 19,129, that's where we're currently at right now. Naresh, just wanted to understand if, you spot fresh shorting opportunities, any individual stocks that you may be looking at?
So some bit of a correction could be possible in a lot of stocks which have rallied a lot. So one space is something like a Titan, which has made a classical double top. So that could drift towards the 3,000 mark in the short term. PFC, which has rallied a lot, can see some bit of a 5-7% correction from here. Same way, a lot of IT names, the mid-cap IT pack has a room for downside. So something like a Birlasoft looks like topping out. A Polycab has made a classical topping out. But it could all be just correction. So the viewers have a very strict stop loss on these shorts. Basically a 2% stop loss, a 6 to 8% downside target. And focus on names which have rallied a lot. So where there could just be a slow and steady correction. So viewers, a lot of stocks need some bit of correction to normalize, and that is where something like Titan, Polycab, etc. could be shorts on current levels, as well as a little bit of a rise from here.
Okay, so point taken as far as some of these stocks are concerned, but shifting focus as to what's happening in the rest of the markets as well. Wellspun India 11% higher. Aster DM has actually seen a sudden spike, 8 to 9% higher, and then PDS as well is a stock in focus. But then a lot of earnings also lined up for us. Jubilant Food is one stock that the street watches very closely to get a sense as to what the LFL or SSSG growth is going to be like. Don't keep your hopes too high, because the decline is likely to continue even if we will see a revenue improvement purely on account of the fresh outlet addition that they have done. What are the other internals and what's the management commentary that we are watching out for? Let's go across to Vinny.
So yes, in terms of numbers that we're expecting from Jubilant Food, this time around we're expecting a revenue of growth of around 4% only. Revenue is expected at 1,340 crores. Now in terms of the profits of the company, we're expecting a sharp decline of 29%. Margins also expected to see a contraction of around 400 basis points. EBITDA margin expected at 20.4%. Like for like growth, which we keep an eye out on, that's the number the company reports instead of the SSSG growth. That's expected to see a decline of 1%. Again, this time it's under pressure mainly due to the weak environment that's there. Discretionary spends that have been a lag as well. So that could be impacting the overall revenue of the company as well as the like-for-like growth. Now, margin contraction obviously is due to the raw material price inflation that's there. And in terms of the operating margins, mainly the negative operating leverage, higher freight cost, as well as in terms of wage inflation. That is something that is weighing on the operating margins of the company. Commentary is going to be important to watch out for in terms of the demand trends that we are expected to see coming in from the company, especially during World Cup. Have they seen any increase coming in this last 15 days as well? Other than that, demand trends in delivery, dine-in, tier 2 cities, how is that doing? Competitive intensity, pricing, how are they shaping up in that form? As well as like-for-like growth, what's the sustainability on that front? Keep an eye out on those fronts on the commentary.
Right, okay, that's the expectation from Jubilant Foodworks. Of course, you've got Tech Mahindra as well, which is lined up for its earnings. Anisha, what can we expect?
Another weak quarter. That's the expectation from Tech Mahindra yet again. But the big question is how the stock will react, because it's managed to hold up quite okay versus the kind of underperformance that we have seen purely in terms of earnings. This time also we're expecting a 1% decline when it comes to constant currency. Margins are expected to deplete further. Remember in FY22 the margin levels were 14-15%. Right now it's 5.5%, and I don't remember seeing a single digit margin profile for any of the IT service companies. So a very bleak margin picture. The question Street is going to ask the management, is this the bottom or is there going to be further weakness? Because this time Street is expecting there could be a one-time cost on account of the restructuring, which is again a probability that the Street is hoping for with the new management and the new leadership coming in at top. But other than that, deal wins have been okay for them. That momentum might be steady, but it's the margin profile which will be weak, and the commentary on the communications vertical will be critical to watch as well. Kunal, what's your take on the charts of Tech Mahindra?
Well, that stock somehow has also gone through a correction in the last 1 month. I think as compared to many of the other large cap IT names, even this stock has gone through a correction. Now, the concern with many of these large cap IT names and even Tech Mahindra is that the stocks are breaching below their 200 moving averages respectively, and that I believe could be a point of concern. So I think Tech Mahindra is just 0.5% or maybe 1% away from its 200 DMA. 1124.25 is the 200 DMA. Stock is at 1139 approximately. So these stocks are trying to now retest their long-term averages, something which the stocks have not done, I think, in the last 5-6 months for themselves. So this could be a real retest of the way in which many of these IT stocks had rallied up, showed a lot of resilience from the September 2022 lows. I think even the likes of Infosys, if I'm not wrong, has already confirmed a break below its 200 moving average. So many large cap IT stocks have already corrected. Tech Mahindra is on the verge of going through a second round of major correction. So I'll wait out for that breakdown below the 200 DMA to initiate a fresh short on the stock.
Okay, point taken. That's the take coming in as far as Tech Mahindra is concerned. But Axis Bank, that's the other one to watch out from the Nifty space. Let's go across to Harsh to get a sense as to what the street should expect.
Right, let's start with net interest income for Axis Bank, expected to come in around that 12,000 crore mark, with a 16% uptick on a year-on-year basis. Also, pre-provisioning operating profit expected to come in at around 8,600 odd crore. Again, 11% uptick year over year. Provisioning is expected to continue to remain benign. 800 crore is where the provisioning number is expected. That's what the larger consensus looks like. And therefore, profit after tax will largely be flat on a sequential basis. 5,800 odd crore is the expectation for profit after tax. Credit costs will continue to be benign, as I did mention, with regard to provisioning as well. Provisioning, in fact, 23% decline on a sequential basis if it comes around that 800 crore mark. Let's also talk about business growth, because that one will be key in focus. You're looking at the City acquisition as well, how the City acquisition really builds with regard and what it's contributing to business growth will be in focus, and both assets as well as liabilities expected to grow around the 4% mark. So deposit growth expected to be around the 4% sequential growth number, and you're also expecting the loans to be or see an uptick of roughly 4%. And of course, going forward, how is the deposit growth traction as well as how is the traction on the credit cards business? All of that will be in focus, as well as what are the benchmarks that they've internally set with regard to City and whether they're achieving it will also be in focus with regard to management commentary.
So that's Axis Bank for you. Of course, the management will be on ET now at 5:15 p.m. So we'll watch out for what the commentary is as far as Axis Bank is concerned. But since we're talking about financials, let's also address the news flow on Jio Financial Services, because it seems like the latest shareholding data is suggesting that promoter has added 6.1 crore share since listing that happened just I think a couple of months ago. Of course, the stock has been quite sideways. It had already seen that it had gone below the level of 200 earlier. From there, it has seen quite a bit of recovery. And I think listed around 180, 190 if I have it right. But nonetheless, Devang, if you've studied Jio Financials, what's the take?
In fact, don't track Jio Financials. It would be difficult to sort of comment on it.
Sure, as far as Jio Financials is concerned, and I'm guessing it will be difficult for the technical experts as well, because it does not have too much history to really watch out for. But let's take the BTST ideas. Naresh, what's the buy today, sell tomorrow idea, if at all, or is it STBT?
So a sell and a buy, so both from the same sector, so more like a hedge trade. A sell on PFC, which has rallied a lot and showing signs of topping out. Stop loss at 242, target price of 232. Second is a buy on Power Grid, which has been showing relative strength, holding on to the support. Stop loss at 198, target price of 205.
Sure. So that's the one buy and one sell idea coming in. Kunal, what about you?
So I'll go with Alchem Labs as the first stock to suggesting as a buy. The targets for the stock is 36.50 and stop loss for this trade is 35.30. And the second would be a sell on trend, something which we discussed even last week. Looks quite weak in terms of the charts. The stock is trading below the 2000 levels, which is a confirmation of a double top formation for the stock. So targets of 1900, stop loss at 2050.
Okay, but Naresh, is there any index trade that one should carry over from today? Because 100 is being held for now, but just about 8 points. And I think we're at the lowest point of this session now.
So I would still wait it out. There is no clear trend. The drift has been lower. The breadth is not great. So a bounce, one cannot be looking out for a bounce trade because the risk reward is 1:1. On the short side, again, the risk reward is 1:1. So at these levels, one is better off not taking a trade on the index, waiting it out for maybe another few sessions.
Right. Just looking at some of the other movers in trade and, pressure within the broader markets, of course, is on a JK Cement. Z is significantly down. You are seeing Bharat Forge as well slip quite a fair bit. And then, of course, Shriram Finance as well, which is lower by about 3%. There's Godrej Properties too, which is seeing some pressure. It's down about 3% as we speak right now. There you go. That's the stock in focus for you. Kunal, year to date, it continues to be Realty, which is seeing the maximum gains, or some other sector has taken charge?
I think Realty is the one which is looking, in fact, even defense, but there's no sector as such, Nifty defense sector. But I think that's another sector which has done reasonably well. Even the PSUs or the PSE index has done quite exceptional. In fact, many of the high beta names from the PSUs have also managed to give more than double-digit kind of returns. But largely, I believe that the real estate pack as of now looks to be a bit more on the overbought side. I would still be bullish on the likes of DLF and Anantraj, but I think maybe waiting for a correction of another 5% to 10%, even from current levels, could actually be a good strategy.
Sure. Actually, I stand corrected on Jio Financial Services. It's listed at around 260-65 thereabouts, and it hasn't gone below 200. It has just managed to hold on to 202 as the 52-week low right now. So, still closer to those lowest end of the range that it has traded in, but had listed around that 260 rupee mark. Separately, what's holding up today, or at least was holding up, was some of the telecom names. Tata Tele, for instance, was doing okay. We, of course, got you that exclusive story on Vodafone, which is likely to get some fund infusion. And then you also have Tejas Networks, which was holding up okay. Is there any name, Naresh, from this pack that you would look at?
Which particular sector?
Telecom.
Again, out here, Bharti Airtel has been a slow and steady performer. At 900, 920 would be a good zone to buy into the name. And apart from that, watching out for Vodafone Idea, because it's been consolidating at the 10 to 12 mark. So if it can cross 12 again, then it's an indication of a trend change for the stock. So watching out for Idea. Industars, there was hope. It has come back to the same retest of 165 to 175 band. Made 3 attempts around 195. So overall, the sector has been relatively better in the current markets, but Bharti Airtel remains the best one. It's been a slow and steady mover, does not see spikes, but 900 to 920 zone would be a good zone to accumulate Bharti Airtel.
What about BSC, Kunal? Is that a stock you've looked at?
Yeah, of course, looked at BSC, but then very difficult to attempt a trade at current levels because the stock has been just going through all the major resistances. So, the earlier resistance for the stock was around 1400, then the stock made a high of 1490, 92 approximately, breached the 1500 mark, and now from 1500 in just the last 3 or 4 days, it's climbed up to almost 1800 levels today. So the pace of rally the last 4-5 days has intensified. Of course, the stock is at a major overbought nature in terms of indicators. So that would be one of the major reasons why I would not initiate a trade. But I sense that if in case the stock cools off, the cool off for the stock would be very sharp, and I would probably be looking out for at least a 1450, 1500 kind of a corrective wave for BSE.
Okay, that's the take coming in on BSE right now. Just want to mark some of the other losers in trade. While, of course, there has been pressure on some of the large caps like an ICICI Bank. Pharmaceuticals, of course, has been quite the weak link today. There's Bharti, which is down about 1.6%, weighing heavy on the telecom sector. Infosys, Tata Motors, Eicher Motors. These are some of the significant losers in trade. Besides that, of course, there's lots within the broader markets as well, which is bleeding. Look at PFC. Polycab is down about 2.5%. There's also the likes of Manappuram, UBL, PI Industries. There's, of course, HAL, which is down about almost 2%. There's Indus Tower, which is down about 2%. And then, of course, Indian Hotels as well, which is seeing a fall of about 2% as we speak right now, but still at levels of 390 thereabouts in trade. Devang, just before we let you go, if any buy strategies you have as a house call?
Yes, so on a thematic basis, and I reiterate this again and again, very important to note that though there can be debates about a bit of consumption, a bit of credit growth when we talk about it, but most importantly, the capex has been extremely strong, be it the government capex, which we talk about. And we know that this year the capex is roughly around 10 lakh crore. And when we talk about private capex, there are all signs that show that in the next 12 to 18 months, and in fact, if there is a longer term horizon of 24 to 48 months, I think a lot of these signals would have started to come out. A lot of brownfield, greenfield projects are getting set up and capacity utilizations are nearing their peak. So I think a lot of these candidates, be it capital goods, though some of them are expensive, but this correction is ensuring that most of these companies again come back to their median PE levels. I think there are a lot of opportunities in the capital goods sectors, allied sectors. There is something in bearings. There is some power ancillaries. I think as a theme, if one plays capex very well, plus credit growth, plus a lot of the banks who support capex, I think this as a theme would play out very well. A basket of capex-oriented stocks, which includes capital goods, infra, cement, be it even building materials to a certain extent, because real estate also does well. So this side of the market, which earlier or the last 5-7 years have not seen much probably light of the day, this will sort of expand very well, the market cap of this company for the next 2-3 years.
Okay, last 30 seconds and we are closing the shop with a downtick of almost 0.8% on the Nifty 100 has been held. That's 19,100. But even if you look at a Sensex, sharp cuts across the board. The advance decline ratio is favoring the declines by a whole lot. It's the banking index, which is down a good 200-300 points. The PSU banking names were trying to hold up, especially the likes of IOB and Bank of Maharashtra. But by the end of the trading session, all the sectors have actually ended in the red, including metals, despite the outperformance that we saw from the likes of Tata Steel, JSW Steel, on account of that story that we brought you that there could be some policy support for the domestic steel producers as well. Media, that was one of your top losers in terms of sectors, Realty, IT, and then follows banking and pharma. In terms of stock-specific names, it's ICICI Bank, which has taken 8 on the chin, down about almost 2%. You had Cipla, Adani Enterprises, Apollo Hospitals, NTPC, some of the other sole losers. Coal India, Tata Steel, Hindalco, Tata Consumers, SBI, these are the stocks that managed to hold up okay. But clearly a weak trading session on the last read and important levels being broken. But tomorrow is the day of expiry, so we'll watch out for how it pans out. For now, it's curtains down on this edition of the show.